Feroze Azeez, the joint CEO at Anand Rathi Wealth, joins in now. Feroze, looking at the market momentum and the kind of weakness that really persists now, how are you looking at the short-term trajectory of the market behavior?
Good morning, Nisha. I personally think I would not call it weakness. See, if you look at it, depends on where you see it from. Okay, from August, when Trump actually announced the trade war more against India than anybody in terms of 25% and 25%, we are about 1,000%, 1,000 points higher than that on Nifty. Isn't that surprising that the world's most powerful man is after your capital markets and creating panic and you're still 1,000 points higher? Of course, if you see it from September 24, we are down 3% in spite of 1.5 years having gone by. So what I'm trying to get to is market is very, very strong. Why is it so strong, and what is the numerical evidence of this claim? You put Nifty closings on an Excel sheet and calculate standard deviation. It is the least standard deviation it has shown in the calendar year 25. How much lower than S&P 500? 600 bips lower than S&P 500. The realized volatility of Nifty is 12.8%. Being a derivative hedger, I have to look at realized and the implied volatilities and try and trade those. So one of the least in the last 20 years is the volatility. But in English, the risk is so much higher than in mathematics. So I personally think the weakness is not there. That's why you don't see 3, 4, 5% corrections on Nifty. I think the budget day, the correction was whatever 1.7, 1.8%. That was the 7th worst day in 3 years. 1.6% was the 7th worst day in 3 years. So I personally think this is the least volatile it could get numerically, and market's gravity is upwards. Of course, have we made new highs? The answer is no. Should we make them? Yes. Sooner, maybe not, maybe later. Depends on Trump Sahab.
All right, Feroze, you have put all the blame on the US dynamics. But Feroze, looking at the sectoral play, IT has had several days of weakness and underperformance to the market. How do you see this AI, getting baked into the market valuation at this current juncture? And what do you make of the strategy when it comes to tech investments?
I think, Nisha, if you actually go threadbare and understand ownerships of different sectors by different FIIs, there are about 17, 18 FIIs whom I call the really short-term FIIs or trading FIIs. And those FIIs, when they own a specific stock, the volatility is going to be higher. Right? This hypothesis you can test using a Bloomberg terminal. Look at all the stocks which fall or rise steeply. You will find these 16, 17 names reasonably common and intersecting. Coming back, IT sector has done very well over the last couple of months before this whole fiasco started. And that was largely because some of these 10, 12 FIIs who are deep-pocketed, short-term in nature had come in. And if you look at how Indian IT sector, of course, they're completely different dynamics. Indian IT sector, the top 5, 7 stocks, I was hearing one very seasoned investors in India saying that 16 lakh people is whom it employs. And the US tech giants, who are especially the AI ones, don't even hire a fraction. So Indian IT has been agile.
At this juncture, would you buy into this fall in the IT sector?
I think IT sector will do well from after this fall. Okay, because there is several areas where IT sector will focus on and not fight the AI, but complement it. Could be iCloud, cloud, could be security, could be digital transformation and stuff. I think IT will bounce back. And if there are further falls, I would see that as a sectorial buying opportunity, not stock specific.
All right, so IT could be a sectoral buying opportunity is what you're saying. Thank you so much, Feroze. It's always a pleasure to get your insights on the market on a day-to-day basis.